Hello and welcome back to our next video in our Investing Fundamentals series. This is going to be another short one. We're going to talk about market capitalization, or as it's most commonly abbreviated, market cap. So what is market cap? Now, when we're talking about companies, there are multiple ways to evaluate them. We can evaluate them intrinsically, like take a look at what the company is making and what it's going to be making in the future based on their growth potential, and assign it a value, assign the company a stock price, a specific stock price based on this data. And what is the market price, though? The market price is what people that are trading the stock are willing to pay for it. So for Meta Platforms, which is basically Facebook, people are willing to pay $330 right now as I'm creating this video. And that would be the market price. So market capitalization aims to assign a value to the whole company based on what the current price of the stock is, based on what the current market evaluation is. This is why it's called a market cap and not like an intrinsic cap or something of that sort. So the market capitalization figure is actually calculated by using the amount of outstanding shares and multiplying them to the current stock price. Now, in the case of Meta Platforms or Facebook, let's do that calculation. So the outstanding shares currently for Facebook are 2.78 billion. So 2.78, and we multiply those to the current value of its stock, which is, let's say, 330. Right now it's obviously fluctuating a little bit because it's trading time. So that would make it $917.4 billion for its market cap, which is basically what you see here, minus the fluctuations that happen in real time, because this market cap is probably lagging a little bit. So you can see here that the market capitalization is basically defined as the shares multiplied by the stock price. That's what it is. And it gives us a quick way to evaluate how much a company is worth based on the market sentiment. And that's extremely beneficial for an investor, because they can use this figure to understand whether a company is undervalued or overvalued. Because we know what the market feels about the stock, but then we can use this figure with other in comparison to other figures, like the free cash flow that the company generates, for example, or the PE ratio and a lot of other metrics, the debt that the company has, and see whether it makes sense for us to pay this kind of amount, this stock price, basically, in order to purchase the stock based on that market cap. Does it actually make sense based on what the company is currently doing financially? That's why and how we're using the market capitalization figure. And this is why I wanted to make a video, so that you can understand that this is the point behind market cap, because it's a figure that changes all the time, and it could literally go from a billion to a trillion in a week or so. Like as long as the stock price climbs, the market cap will climb as well. But it gives us a very, very nice figure to use for our calculations, because it's tied to the amount of shares. And that's extremely important, because it gives us a total price for the whole business, really. That's what it is. So that's what I wanted to mention in regards to market capitalization. And obviously we're going to talk more about it and how it relates to all the other metrics that we're going to be using later in this course. But for now, I wanted to end this here, and hopefully that made a lot of sense to you. And you now know how market cap is calculated if you were not aware of it. So thank you for watching, and I'll see you in the next video. Bye.